That would be amazing for those of us holding gold. Is it going to happen in a straight line? The answer is no, it generally doesn't. But I do think by 2030, I think we could easily be at 7,000 an ounce. Weaker dollar, usually the metals, especially gold, goes up. But weirdly enough, with silver, it's very momentum driven, meaning that sentiment plays a monstrous role in whether silver's rallying or falling. And right now, silver is obviously king of the castle. It's at new all-time highs versus gold.
In the year 2025, gold made an all-time big leap and increased its value by 2 times in less than 2 years. The global gold demand reached 1,313 tons in the third quarter of 2025, the highest quarterly amount ever, according to the World Gold Council. Looking ahead into next year, the central banks are continuing buying, the trade war by Trump is continuing, geopolitical risks are high, and ETF holdings are growing with more Fed rate cuts expected, so it appears there is still more to this bull run. With the global financial crisis, gold has soared beyond $1,000. It reached a new high of $2,000 during the COVID-19 pandemic. After Trump announced tariffs in April, however, it broke the $3,000 mark. It reached the $4,000 level in the recent extended U.S. government shutdown. Financial analyst Gareth Soloway presents a bigger picture. According to that trend in history, Gareth believes, gold might have reached approximately 7,000 an ounce by 2030. He said it will not be a straight line and the long-term trend is towards a massive upward move. Let's dive into today's video to uncover some valuable insights. Don't forget to subscribe and hit the notification bell so you never miss an update.
The breakout on gold came, at least from my analysis, you did get a breakout on gold. If we look at the chart here, you see what's called a wedge pattern. So you take the all-time high to the secondary high here, and then ultimately you could see there was this wedge forming, essentially a triangle formation, where it squeezes price, right? And that's what a wedge pattern essentially does. It squeezes price until price either has to break out or break down. And what we've seen is price broke out above the wedge. So again, this triangle, the white trend lines are the wedge pattern. It broke out, and now what's doing what we call a bull flag formation, which is just like the name says, it's bullish, right? And so the idea is this favors a move up to retest the all-time highs. Once we get there, we'll have to see if it breaks the all-time highs. That will be resistance, but again, resistance can be broken. And the only thing you want to monitor as a technician here is if by chance this bull flag fails and we start trading below this wedge pattern, these two trend lines, well, let's say we trade down here, that would be the one bearish scenario that could have come where gold would go lower in the near term. But aside from that, I'm bullish on gold here in the near term. Makes a lot of sense. I think we'll know a lot more after the Fed decision. We'll probably see some sort of move, but it is a bull flag formation after a breakout on gold. Like, I have long-term holdings in gold, right? So I'm a big fan of gold. I see what's going on in the government, the world, the central banks are buying like crazy. Like, everything's pointing that gold's going to continue up. But as a shorter-term trader, I have to respect the double top, the all-time high, until proven otherwise. Even though longer term, I think it's going a lot higher. So in talking about where could this ultimately go, I think what we have to do is you have to kind of start to look at some of these bigger patterns. And what you want to do is you want to zoom out and go to a weekly chart and say, okay, let's look at these past bull market moves on gold, right? So we'll remove all our trend lines. We're even going to go to the monthly chart. And what you do here is we start to say, okay, well, let's say that the last bull move in gold, like the expansionary blast off, took us up around 176%, right? So that was a pretty big move. You could argue it even goes back down to here where it was about a 375% bull move. And this, by the way, was in the 2011 period. Now, if we go back to the 1970s, let's look and see how big of a move this was. And this one was about 700%, right? So again, gold was obviously a lot lower back then. I would even argue we need to even go to the recent lows here. So we're looking at about 700 to 800% in the 1970s. In the 2000s to 2011 top, we're looking at about 658%. And so we do see it coming down percentage-wise because the price is getting more pricey. But if the same methodology holds true, we would say, okay, well, let's go up and let's do 550% or so. And really, if you're looking at these longer term viewpoints, and we're definitely talking around $7,000 per ounce. And that would be following the same trend of, let's say this is about 750%, 650%, and then 550%. That gets us to a target of around 7,000 on gold. And again, that would be amazing for those of us holding gold. Is it going to happen in a straight line? The answer is no, it generally doesn't. But I do think by 2030, I think we could easily be at 7,000 an ounce.
The silver price is remaining impressive. Quotations of over $60 per ounce. The precious metal is hitting new all-time highs and is obviously performing much better than gold. The gold/silver ratio is an important kind of argument to this point. It is currently 69, which is still near its own long-term average of about 65, but indicates the tremendous performance of silver over the last few months. Yet alongside this healthy upward trend, Standard Chartered analysts anticipate the silver market to be susceptible to pullbacks in the short term, before the rally can enter into another phase. Soloway states just now, silver is having a good momentum and is even doing better than gold. He thinks that with the uptrend in place, silver can reach new all-time highs in 2026. Now let's redirect our attention to the video again.
This is fascinating, and keep in mind, we're only going back to August on this chart, and when you go to a short time frame, it gives you a short-term move, right? When you're looking at a monthly or a weekly chart and you're going back 10 years or so, you're going to get the bigger move overall. And what this tells us here is that silver has likely put in a near-term top, meaning that in the near term, it's due for a little bit of a pullback, much the same as what happened here. Remember, we had this big move up, and then look, we chopped around, and then eventually we made new all-time highs. And so what I would expect here is the same sort of thing, maybe a pullback down to, let's say, 54, our prior high, maybe even down here. But the beauty of this, it's still an amazing uptrend, and the idea is very clear, is that even if we come back here, eventually we're likely to go up as long as we don't break this upsloping ascending trend line. And so short term, I like it for a pullback on silver. It's had an amazing near term. I mean, think about this. On November 21st, silver was $48 and change. I mean, it just today, we're basically at $62. I mean, that's an incredible move for silver. It's due for a pullback. Don't be upset about that. It's a near-term digestion of move. Let it pull back, let it digest, and then as long as it holds this channel, it should make new all-time highs in 2026. Weaker dollar, usually the metals, especially gold, goes up. But weirdly enough, with silver, it's very momentum driven, meaning that sentiment plays a monstrous role in whether silver's rallying or falling. And right now, silver is obviously king of the castle. It's at new all-time highs versus gold. And so you see that momentum building. I also think, again, when you have a move from 48 to 62, unless the dollar crashed, we can't really say, oh, it was the dollar, right? So it's got to be more of that momentum builder. I think gold is such a big market that, needless to say, it's a little harder to move on momentum. But even gold, again, it's no doubt that sentiment, central bank buying, and all these other factors have led to move up quite a bit.
The markets are silent with no action, but underlying it is not that dull. Silver and gold are trapped in a box, and the US dollar is suggesting a huge reversal formation that has the potential to invert the whole situation or validate the recent move. The two precious metals are experiencing strong technical purchasing and are enjoying an unexpectedly dovish lean of the Federal Reserve and a declining US dollar index. Which market do you think will make the next big move, gold, silver, or the US dollar? We'd love to hear your thoughts in the comments below. If you enjoyed this video, give it a thumbs up and make sure to subscribe for more updates. Thanks for watching.